Thanks for joining us at parttimetrader.net. Welcome to this short presentation where we'll explore the critical difference between trading and gambling. These two often get confused because they both involve risk and the potential to make or lose money. But how they work and the mindset behind them couldn't be more different. Today, we'll break it down clearly using expert insights, practical examples, and real world strategies. Let's kick it off here. What is trading? Trading is the process of buying and selling assets based on careful analysis. Traders use tools like technical indicators, fundamental research, and economic trends to make informed decisions. It's not about luck, it's about logic, strategy, and discipline. The ultimate goal of trading is to build sustainable wealth over time, not to chase dramatic one-time wins. What is gambling? Gambling is based mostly on chance. The odds are fixed, and in most cases, the house has the edge. Whether it's slot machines or roulette, you can't influence the outcome through skill. Gambling is designed for entertainment and often triggers the brain's dopamine response, which makes it addictive. Unlike trading, it doesn't offer a path to long-term financial growth. Let's talk about the main differences between skill and strategy. One of the biggest differences is skill. Trading rewards those who study, learn, and adapt. Traders develop strategies, test them, and refine their methods over time. Gambling, on the other hand, relies on luck and gut feelings. In trading, data and structure guide decisions. In gambling, it's usually just hope. Let's look at the approach to risk. Traders manage risk thoughtfully. They assess how much they're willing to risk. They use stop loss orders and practice position sizing to limit exposure. They also diversify their portfolios to avoid putting all their money in one stock or in one place. Gambling often involves putting everything on one bet. Trading is the opposite of that. Let's look at time frames and goals. Traders operate on different time frames. Day traders look for quick, small wins within a single day. Swing traders, which you'll learn at parttimetrader.net, is that we hold position for days, sometimes weeks, to catch larger trends. And position traders or long-term investors hold assets for months or even years. But in all cases, the goal is the same: planned, patient growth. Let's look at some of the overlaps and misconceptions. There is some overlap. An emotional trader, someone who chases hype or reacts out of fear, can easily fall into gambling behavior. And games like poker do involve skills and statistics, which makes them a bit of a gray area, but real trading stands apart because it relies on discipline, data, and strategy, not excitement or impulse. In conclusion, why the difference matters. Here's why all this matters. When you treat trading like gambling, you put your financial future at risk. Serious traders take an educational path, investing in knowledge and building skills before committing money. They also build a strong psychological mindset, staying emotionally grounded and focusing on long-term goals. Understanding this distinction is what separates people who grow their wealth from those who lose it chasing luck. Now, if you found this helpful, want to learn how to trade smarter, not harder, without gambling your future, subscribe to our channel on school, parttimetrader.net, or hit the like button on YouTube and comment with your biggest takeaway. Now, if you want beginner-friendly guides on ethical investing, risk management, and building wealth the right way, visit parttimetrader.net or check out the free resources in the description.